In today's video, we're going to break down the FIFO rule, the first in, first out rule. If you're trading in the United States with a regulated broker, then listen up because this rule applies to you. What's up, guys? Welcome back. I appreciate you being here. For those of you that are new, my name is Austin Silver. Today, we're going to talk about this very important rule that applies to those of you who are trading in the United States with a regulated broker. Now, I use Hereunder. If you follow me and you see my daily trading videos, you know that that's the broker I've been using for a long time. I don't get paid to say that. I think that they're just a great broker that if you're trying to build a long-term, safe, consistent trading business, Hereunder is a great place to do that. I've never had any issues. And again, they don't pay me to say that. So that's like a free sponsor for them right there. Now, if you're new to the channel, before we get into TradingView, please do me a favor. If you find value, all I ask is that you give me a thumbs up and subscribe so you don't miss any future videos. Now, as you can see, I have a long position in on Euro USD. The position doesn't have a stop loss. It doesn't have a take profit because it doesn't matter for this video. The point that I want you to get out of this is when you're adding to a trade, meaning you've already made a decision, you've put one position in. This FIFO rule is going to come into play when you look to add to that entry, meaning take a second, third, or fourth position. So let me show you what happens when I go long again here, Euro USD. It's going to add, as you can see, another long entry signal. So now we have the 2 million unit order and the 49,000 unit order. And you can see them at the bottom of the screen right here in the bottom left-hand corner. Now, where this FIFO rule comes into play is here. When we want to get out of this trade, let's just say for some reason now we want to close it. Normally you wouldn't want to close a trade that quickly after taking a position, but again, we're just using this as an example. So remember, the 2 million unit position here, the bigger position, was my second position. So now when I go to close some of this, because it's a long position, I need to sell it to close it. Let's say I just want to close 25,000 units. When I hit sell, it's not going to pull from the 2.3 million unit order. It's going to pull from the 49,000 unit order. So when I hit sell, watch, the 49, you see it in the bottom left, goes down to a 24,000. So what it did there was it closed in units. It's looking at all of my units as a net position. If I click here, you can see all 2 million units as one position. It's going to close from my first entry price first. The only time it won't do that is if I come to the screen itself here, or if I go to the individual positions tab at the bottom here, and I close that second position individually on its own in its entirety. If you want to piece yourself out, that's where the FIFO rule comes into play, and the broker looks at your entire trade as one position and it pieces you out from your first entry price. But if you want to just close the entire trade like I just did, you can do that as well, whether it's the first entry or not. The FIFO rule only applies when you're closing in smaller sections of units rather than the individual trade. One more example here. So I have 3 entries, 160,000 units, 260,000 units, and then 360,000 units, which total puts me at a net position of 780,000 units long Euro USD. The first position, like I said, was the 160,000. So if I was to come in and let's just say I want to close 300,000 units of the currency, right? It's going to close the 160,000 completely when I sell it back, and then it's going to pull from the 260,000 unit position next, bringing that down to 120,000 units. Now, if I want to piece out another 300,000, it's going to do the same thing. It's going to take the 120 and piece out of the later entry, which was the 360, bringing that down to 180,000 units. I hope that makes sense. So basically, one more time, if you have multiple entries on a position and you close the position in its entirety, that individual second entry or third entry, that will come out, absolutely. But if you're piecing out in units, meaning you have net long 100,000 units and you piece out 25,000, it's going to pull that 25,000 from your first entry, whatever price that is, first, and then progressively to the last entry. It's going to pull the net position that you take out. So again, it's always going to be first in, first out. I hope that this short video makes that very clear. If there's any questions, please drop them in the comments down below. I really wanted this to be just short and sweet, very factual. I'm going to put this in the TradingView playlist, so if you haven't seen the other videos on how to execute and do your chart analysis using TradingView, I love this software. And again, they don't pay me to say that. So Check out the other videos. Let me know if you have any other questions. I'm here to help you guys every step of the way. I appreciate it. If you found value, like I said, all I ask is a thumbs up, and make sure you're subscribed so you don't miss the next video.